SwayamPrabha. Digital India. Educated India.
Hello everyone, welcome to the last topic in this particular course of emerging trends in real estate finance for the course Real Estate Finance and Investment Strategies. So first the objectives, learning objectives we will have for this particular class. So analyze the impact of PropTech on real estate financing mechanism, evaluate blockchain applications in property transaction and ownership structures, assess green financing instruments and their role in sustainable development, compare traditional and emerging financing models in the Indian context, identify strategic opportunities and implementation challenges, and the apply knowledge of emerging trends to real estate investment decisions. So, we have talked about the Indian real estate market size. There can be different numbers we can talk about current value, projected value by 2030, by 2040, and we can see that the significance of the size of Indian real estate market and its growing levels, which can be significant when we compare it with the world level market, and also the kind of GDP contribution we get from the real estate sector. The driving forces of changes ahead will be, or currently which we can see in India, is Digital India initiative and infrastructure development. So throughout this course we have seen that how the digitalization and the kind of internet penetration has made real estate much more transparent, and many new opportunities have become accessible to different parts of the country. Some of the financing which was not available earlier in tier 2, tier 3 cities is now available because of the advent of the technology enabled financing. The PropTech and all is improving the real estate sector, and we have seen that infrastructure development is also happening at a rapid pace, and that is also impacting this sector. Then we have seen earlier, we have discussed and that how RERA has divided the period into pre and post RERA, and we have seen significant improvements in terms of transparency and the kind of the delivery of real estate on time for the real estate investors, and that has been very good development, and how the GST implementation has also helped in this area. Then we have talked about the changing consumer expectations and demographics. So if we talk about that in detail, that how consumer expectations is changing, evolving throughout this period, that new generation looks at real estate differently from the earlier generation. And we have also briefly discussed earlier that how during a particular period when you grow up, that impacts your way of thinking about real estate. And so these kind of consumer expectations and how the demographics of India is also impacting the overall real estate trend. And then global capital flow and international standards, that more and more foreign capital is coming in India and going for investment in the kind of commercial real estate which is much more institutionally managed, well managed, and they are looking for better return projections in a proper formatting, and they are looking for different simulations to actually inform them about the future possibilities of this area. So this is not only that we are getting capital, but the standards which are being followed in real estate is also improving day by day. And then we have climate change and sustainability imperatives are also creating their own thrust. So we have seen that whether is in the form of the kind of financing companies are seeking for, and the green building certifications they are looking for. So this is impacting the real estate business also in different ways. Then let's talk about the PropTech and define property technology. So the application of technology to solve challenges across the real estate industry, encompassing financing, transaction management, and valuation. So it's not just a single point use here. There is basically much more diverse usage of PropTech. So we can see that the it's about financing, it's about transactions, it's also about management, and also focusing on the valuation. So if we talk about the evolution timeline, so you will see that we have PropTech 1, which was there for 1980s to 2000, which was digital listing and basic online marketplace. So that was during the dot-com bubble period, or before that. That main aim was basically listing all the properties and creating an online marketplace. That was the only purpose at that time. Then from 2008 to 2018, we have seen that sharing economy and crowdfunding platforms also started coming in. That is, people could look for funding through digital means. And then from 2018 to present, we have seen that PropTech now means much more. It also means AI, it also means blockchain technology and IoT integration. So that is how the PropTech has evolved in real estate. So that is there. And market impact, we can see that global PropTech market is about 18.2 billion USD dollars, about USD, and Indian PropTech investment is 3.8 billion USD, which is for 2019 to 2003. So you can see that in a small period of time, we are seeing a pickup of investments in this area, and projected CAGR is 16.8% through to 2030. And so we also see that in India there will be a great opportunity in future in this area. So so these are some important areas where we can actually think about PropTech. So market impact will be substantial for this, and this particularly is exciting that we are still in the early stages. Companies and professionals who understand and adapt to these technology now will have significant competitive advantage as the market matures. Then we go to digital lending transformation. So one of the most immediate and practical application of PropTech is your digital lending transformation. So we have traditional mortgage processes have been plagued by inefficiencies. So that we are simply accepted as the way thing works. Consider the traditional challenges. So approval timeline of 3 to 4 weeks, requirements for 15 or more physical document requirements, limited liability, limited ability to compare lender effectively, and then high processing cost and complexity. So if you see that traditional process challenges were many. First of all, the time. There was excessive time was required. Second, physical documents were required for everything. So 15 plus physical documents. Then limited lender comparison capability. So if you want to compare different lenders, you had capability of maybe doing 15, around 15 or 15, 20 kind of, lender documentation comparison. And then high processing cost, because you were using manpower and time, so much time was going into it. So of course the processing cost will be high, and it was a very complex process. But then we have digital platform solutions now. So online mortgage marketplaces, we can see that if you want to take loan or if you want to go for mortgage loan, there is, once you enter that you want to go for home loan, or you will have these marketplaces immediately, online marketplaces, and you can compare 30 plus lenders instantaneously. So these kind of advantages, you can see that earlier you had to go for an expert and they will take time and then they will come out with the option for you. But now you can do it immediately and you can see that instantaneously what are the options available to you. Then alternative data assessment, so utility payments, rental history analysis, you can do all that very quickly. So these are some very big advantages of the speed and the kind of data you can process. So creating true price competition basically very quickly. And then automated underwriting, so using AI driven evaluation process applications, they basically AI can help you process applications very fast and often more accurately than human underwriting. Then digital documentation reduces the paperwork requirements. So that is there. And then speed processing is very fast in these type of automated solutions. And then quantitative impact we can see is remarkable. So processing time reduction of 70 to 80%, documentation requirement reduces by 40 to 50%, and customer acquisition cost addressed by 8,000 to 12,000 per customer. So customer acquisition cost has also decreased a lot. So these aren't marginal improvements, they represent fundamental efficiency gains that benefit all stakeholders in the financing process. Then we go to crowdfunding and fractional ownership. So one of the most democratized trends in real estate finance is the rise of crowdfunding and fractional ownership platforms. So traditionally, real estate investment required minimum investment of 5 to 10 crores, effectively limiting participation to ultra high net worth individuals and institutions. Fractional ownership platforms have reduced minimum investment to 25 to 50 lakhs, and some platforms now accept investment as low as 25,000. The expansion has increased the potential investor base from dozen to 1,000 for any given property. So these are three primary platform models. So we have debt-based crowdfunding offers fixed returns through security, through secured lending, essentially investor becoming lenders to real estate projects. Then we have equity-based crowdfunding, providing ownership stakes with appropriate potential. And then we have hybrid structures which combine characteristics of both debt and equity. And then coming to Indian market performance in this, which has been impressive. So market size has reached now 750 crores in 2023 with projection of 2,500 crores by 2026. Average return has ranged from 12 to 18% IRR in pre-COVID period, moderated to 8 to 14% after that. And then geographical concentration basically for all this remains high in big metro, in your major metro cities like Bengaluru, Mumbai, Pune, Hyderabad. But we can look to see that this expansion is now into secondary cities as platforms mature and seek new opportunities. So right now you can see that this platform has a small market size, but projection is very rosy. And we can also see that the geographical concentration is there right now in certain big cities, but sooner you will see that as these platforms mature, you will see that they will reach and go to more tier 2 cities, and more projects will be under their ambit, and the investors will have more opportunities to invest. Then we have AI and big data applications. So artificial intelligence and big data are transforming real estate from an industry based on intuition and experience to one driven by data-driven decision making. Let me just go through the key applications that are already changing how we evaluate and finance properties. So automated valuation models, AVMs, use real-time property valuation combining multiple data sources. Machine learning algorithms analyze comparable sales, market trends, neighborhood data, and even satellite imagery to predict property values. So these systems show accuracy improvement of 25 to 30% over traditional appraisal methods. Then we have risk assessment enhancement is another crucial application. So OCR and natural language processing automate documentation, automate document verification, while satellite imagery analysis tracks construction progress and assess neighborhood characteristics. Then we have sentiment analysis, monitors news and social media to identify emerging market risk before they become obvious to traditional analysis. And then we have portfolio optimization. So basically multivariable analysis for institutional investors make better allocation decision across property markets and asset types. Then we go to the practical application of them. So practical applications are impressive. Due diligence time reduces 60 to 80%, valuation accuracy improvement of 28% for complex properties, and risk assessment automation that reduce manual analysis time by 90%. So these improvements aren't just about speed, they are about making better decisions with more complete information. So particularly exciting is that these technologies are becoming increasingly accessible to smaller players, not just the larger institutions. Then we go to blockchain fundamentals. So blockchain technology and and basically understand how it addresses the fundamental challenges in real estate transaction. So blockchain is often misunderstood. So let's clarify. So the core characteristics and practical applications. So decentralization means no single controlling entity. Transactions are verified by multiple parties across a network. Then immutability, so ensures permanent, unalterable transaction records, very big feature of blockchain. So once something is recorded on the blockchain, it cannot be changed or deleted. Then transparency provides visible transaction history to all authorized parties. You have smart contracts are self-executed agreements with term directly written into code. So in real estate, these characteristics address persistent industry challenges. So we have also title management and ownership verification become more reliable and faster. Then transaction processing and settlement can be accelerated significantly. Property tokenization enables fractional ownership, and automated compliance reporting reduces the regulatory burden. So the efficiency improvements are substantial. Title search time reduces from weeks to hours. Transaction cost potentially by 4 to 6%, and settlement time from 30-60 days to same day potential. However, it is important to understand that blockchain isn't a magical solution. It's a tool that particularly is effective for problem solving, involving trust, verification and record keeping, which happens to be central challenges in the real estate transaction. So the key is understanding where and how to apply blockchain technology effectively rather than trying to use it for everything. Then we go for tokenization of real estate. So digital ownership revolution. So tokenization represents one of the most revolutionary application of blockchain in real estate. So let me walk you through the process and its transformative potential. So the tokenization process involves several steps. First, property valuation and legal structure creation establish the foundation. Then digital token are issued representing ownership shares in the property. Then we have smart contract are developed to manage rights and responsibilities. KYC compliance and ensures that regulatory adherence. And finally, token are distributed with secondary market trading capabilities. So the benefit analysis reveals significant advantages: enhanced liquidity through fractional trading capabilities. Investors can buy and sell portfolio properties rather than the entire building. Lower investment thresholds reduces barriers from 5 crores to as little as 1 lakh. Global investor access, you have creates borderless investment opportunities. And then automated compliance embedded regulatory requirements into smart contracts and transparent record provides immutable ownership history. However, implementation challenges are significant. Regulatory uncertainty and around token classification, legal enforceability questions for smart contracts, and market adoption barriers, and the need for comprehensive investor education is also there. So despite these challenges, tokenization has the potential to create unprecedented liquidity in real estate market. Imagine being able to sell 10% of your property investment as easily as selling stocks. That's the ultimate vision of real estate tokenization. So you can, one issue which we had discussed earlier, that the difference between equity market and real estate is that real estate, you cannot sell a small part of your flat or your building or the overall project. You will have to sell it in totality. So basically, when you talk about equity, you can sell 1 share, you can sell 10 shares. So that kind of advantage, if you can get, that you can basically sell a part of your real estate through these tokenization mechanism, which we can achieve in using the blockchain. So if we can achieve that and we can successfully implement that, then we can have a more robust real estate transaction process, and more and more people then can access it also. So that is there. Then we go to smart contracts in transaction. So smart contracts represent one of the most practical application of blockchain technology in real estate transaction. So these are self-executing contracts with terms directly written into code, automatically enforcing agreement conditions without intermediaries. We have functional applications, include escrow service, So that is one area. Then we have basically with automated fund release upon conditions fulfillment, and no more waiting for the manual verification. Then we have lease management. So lease management handles rent collection and security deposit management automatically. Then we have mortgage processing. So mortgage processing automates disbursement and repayment schedules. And then we have revenue distribution that ensures proportional income allocation for investor properties. And then we look at construction financing, so which enables milestone based payment releases. Then the efficiency gains so are compelling. We have intermediary cost reduction of 2 to 4% of the transaction value, processing time acceleration, which is 70 to 85% improvements. So that 70 to 85% dispute reduction through automated execution, and transparency enhancement at all as all parties access the same contract terms. And then we have current limitations also in this area, which include local framework adaptation requirements. So that will be there, and they are basically technical complexity and security consideration, which require specialized expertise, and integration with traditional systems remain the challenges of this area. So these are your smart contracts and transactions. Then blockchain land registry. So land registry management is perhaps the most compelling application of blockchain technology in Indian real estate. So our current system faces several severe challenges that blockchain can directly address. So current system challenges would be your multiple overlapping records across departments. Then 70% of properties with unclear titles, high incidence of fraud and disputed ownership, and lengthy verification process basically. And then we have blockchain solution benefits. So you have immutable records, so tamper proof ownership history will be there. Instant verification enables real time title search capability, and then cryptographic security measure reduces fraud, and the automated verification process improves the cost efficiency, and transparent ownership chains enhance the market confidence. So basically these are the solutions which providing the benefits. And then Indian implementation, if we want to see, there are some cases. So promising progress like pilot projects in Andhra Pradesh and Telangana. Niti Aayog Aayog has included blockchain in its national strategy, and we are seeing gradual adoption with regulatory support development which is taking place. So the transformation of land registers could be single most impactful blockchain application in Indian real estate. Clear verified property titles would unlock significant economic value and reduce transaction cost across the entire market. However, implementation requires coordination across your multiple government levels and significant infrastructure investment, making this a long-term transformation rather than an immediate change. So then we move to sustainable real estate growth. So we have market evolution and drivers. So let's shift to green finance and sustainable real estate, which represents one of the fastest growing segment in our industry. So growth statistics are remarkable. We have green certified space moving, grown from just 2 million square feet in 2005 to 7.6 billion square feet in 2023. So there is a significant jump in the green certified space. That's a 3,800 fold increase in less than 2 decades. Project green construction is expected to represent 55% of the new commercial construction by 2025, and projected green is like very rosy number. And then we have green residential has also grown 35% annually since 2019. That also is significant number. And we can see that the registered projects are like around 6,000 plus across India. So there is a lot of growth in this area if we can talk about India specifically. And certification systems provide the framework for this growth. So we have IGBC, serves which are some domestic standards, then GRIHA, government endorsed rating system, and LEED, which is internationally recognized certification. So that also has strong Indian adoption. Also we have EDGE offers IFC, developed efficiency focus certification. So there are multiple these certification systems, and people are accepting them, and more real estate stakeholders are now moving towards this thing. And then the performance premium, so it demonstrates that sustainability delivers financial return. So rental premiums of 5 to 12% above conventional buildings. You have sale premium of 8 to 15% valuation advantage. Occupancy rates also 5 to 8% higher than market average, and operational saving of 20 to 30% on energy, and 30 to 50% on water consumption. So these aren't just feel good numbers, they represent real financial performance. Sustainable building consistently outperform conventional properties across multiple metrics, making your green finance not just the environmental responsible but financially advantageous. So this trend is accelerating as tenant expectations evolve and regulatory requirements become more stringent. Then we go to green bond mechanism. So dedicated sustainable development financing. So basically green bond represent a sophisticated financing instrument specifically designed for sustainable development projects. Understanding their structure helps us appreciate why they are becoming increasingly important in real estate finance. So the structure and requirements are specific. Use of proceeds must be exclusively for qualifying green projects. You can't use green bonds funding for conventional construction. Project evaluation, so that can be one area. Project evaluation requires systematic selection criteria to ensure environmental benefits. Proceeds management demands the transparent allocation tracking, and impact reporting requires regular measurement of environmental outcomes. And Indian market development has been impressive. Our first green bond issuance was by Yes Bank in 2015. We have reached USD 10 billion by 2023. Real estate represent 25% of the total green bond market, with leading issuers including REITs, major developers, and financial institutions. So the cost advantage are significant. Interest rate reduction of 20 to 50 basis points below conventional bonds, enhance access to the ESG focused capital sources, and regulatory support through expedited approvals and incentives, and market positioning that establishes sustainability leadership. So green bond aren't just about lower financial cost. They are about accessing new sources of capital from investors specifically seeking the sustainable investments. This expanded investor base can be crucial for large-scale sustainable development projects. Then we go to specialized green financing instruments. So the green financing ecosystem extends far beyond bonds to include specialized instruments designed for different aspects of sustainable real estate development. So we have green loan and mortgages offer interest rate discount of 10 to 25 basis points, extended loan tenures and higher LTV ratios, reduce processing fees and expedited approvals. Major Indian lenders include SBI, HDFC, Axis Bank. So, they now offer dedicated green financing products. We have energy efficient financing, include innovative approaches. On bill financing allows repayment through utility savings. Energy performance contract use ESCO implementation models. So partial risk guarantees provide government-backed risk mitigation, and performance-based pricing linkage returns to verified savings. So and there are government support programs also here. So government support programs provide additional incentives. Municipal incentives include additional FSI, tax rebates and expedited permits. National program offers NHB refinancing and Sunref India credit lines. And then international support comes from the World Bank, Asian Development Bank, green building facilities, while state level initiatives focus on renewable energy development funds. So there are various government and central government, state government and also World Bank level supports also in this area. Then we have impact measurement and the reporting. So ESG metrics and performance tracking. So we have key environmental indicators including energy use intensity measured in kWh per square feet per year benchmarking. We have water use intensity liter per square feet per year measurement. We have carbon emissions which is in CO2 equivalent per square feet per year tracking, and we have waste diversion basically of percentage from landfills and renewable energy share of the total consumption. So these are some key environmental indicators which ESG will be looking at, and their measurement will be included in ESG metrics. Then financial performance metric will include development costs, so green premium quantification 2 to 6% your above construction, so that will be there. Your operational savings, track energy and water cost reductions, so that will be in the financial, and the market premiums will be for measures the rental and sale price advantages. Financing benefits capture the interest rate and term improvements, and valuation impact shows the cap rate compression of 25 to 50 basis points. And reporting framework will be, we have GRESB, that is Global Real Estate Sustainability Benchmark, or CDP Carbon Disclosure Project, and TCFD, your Task Force on Climate Related Financial Disclosure. So they offer structured approaches to impact reporting. So the critical point is that measurement isn't optional, it is required for credible green finance. Investors and lenders increasingly demand verified performance data, making robust measurements and reporting systems essential for accessing the sustainable financing. So the idea is that if you are performing in all these key metrics, the kind of indicators which tells any finance company that you are actually doing what you are saying, and it is reflected in the numbers, in the key performance indicators, it is visible, then they will be financing you after the thorough checks through these different indicators which they will be looking at. So that is how this system will work. Then we have convergence of trends. So here we can examine how these trend converge and amplify each other's impact. So the real transformation happens not when the technology work in isolation, but when they work together to create an integrated solution. So we have PropTech plus blockchain integration. So it creates end-to-end digital transaction platforms. It leads to AI-powered property matching with blockchain verified titles. And then you have smart contract automation with digital mortgage origination. So these are the things we can get after PropTech plus blockchain integration. Or we can actually look at IoT monitoring with blockchain secured performance data, and also going to PropTech plus green financing synergies. So IoT enabled performance based financing, dynamic interest rates linked to building performance, and automated compliance verification for the green bond. So some of these points, when PropTech and green financing is synergized, or AI enhanced green building valuation models can also be there. So these are some innovative uses when PropTech and green financing actually synergizes. Then we have triple convergence examples also, when both PropTech, blockchain plus green financing comes together, which shows the the ultimate potential of smart green township with integrated financing, combining all three trends of tokenization, tokenized green real estate investments, democratize access to sustainable properties, and blockchain verified carbon credit generation, which creates new revenue streams, and AI optimized sustainable portfolio management maximizes both financial and environmental return. So we can see that when we are talking about PropTech, blockchain, or we are talking about green financing, we cannot generally talk about them in isolation. They have to work in synergy. So in upcoming times, you will see that their usage is increasing more and more, and with the more and more usage and awareness about them, we will see that they will be synergized, they will be working together, and the application will be used of all these technologies in the same project, coming together. And once we are aware that what are the issues, what are the problems, and we will try to resolve them, we will see that more and more synergy will be developed. So the market impact is multiplicative rather than additive. So development financing, cost reduction of 100 to 150 basis points, transaction processing acceleration of 65% faster completion, and enhance investor access, creating a 10 times increase in the potential participants. And the key insight is that competitive advantage will come from integration, not from mastering individual technologies in isolation. So coming together and in a synergized way can be very beneficial. Then the implementation challenges. So the significant challenge to implement these emerging trends in Indian context. So technological challenges so include infrastructure limitations with varying internet connectivity across different regions, integration complexity when connecting new systems with legacy platforms, and expertise shortage in specialized talent requirements, and security concerns also around cyber security and fraud prevention. So these are some technological challenges, that there is infrastructure limitation, there can be integration complexity, that there is an existing legacy system. To root it out completely and bring a new system is not that easy. There has to be proper integration. Expertise also, you will have to find these experts which might be costly, which might not be easily available, especially if they will be available, they will be available initially in only tier 1 cities. And then security concerns are also there, because they can be, they have to be cyber security provisions which have to be properly implemented, and only then such type of technologies can be included in the existing systems. And then regulatory and legal barriers are also there. Then there is a framework uncertainty. Regulations should also catch up with these new systems. Compliance complexity, that multiple regulatory jurisdictions are sometimes there, and these type of systems can be operated from anywhere. So how the jurisdiction will be decided. And then legal recognition also has to be there of the smart contracts, that the legal framework should also acknowledge these systems and these contracts. Only then they will be of any use. And then cross border restrictions also, that foreign investor investment limitations are there, that you have to resolve that with the help of government. And then market and cultural factors also, there is a trust deficit, preference for traditional processes, because somebody would say that if my existing system is already working fine, or they are adapted to it, the whole team is adapted to it, then why should I take time and bring the new system in? What is the benefit for me? So many hindrances will be there from the people also. And of course, they will not trust something which they cannot see or understand. So the understanding of these systems in a very simple language also has to be done. And then knowledge gaps also is there, that limited stakeholder awareness. People are not aware about these technologies. They are not very clear that what these technologies actually are. And then implementation cost is also there, that once in the starting you will uproot your existing system and bring in new system, so it will cost more. So that implementation costs are there. And then cultural preferences also, that physical documentation and face-to-face transaction, there is a cultural significance of that people generally don't rely, that whether these online systems can be relied on or not, because something which they cannot feel, the people they cannot meet, how can they rely on the system? So that also will impact. And strategic solutions will be your phased implementation approach. Instead of implementing then the total uprooting the current system completely, bringing the new system, instead of that, phased implementation will be better, so that people are also aware of these new technology, they understand these new technology, and over the time, then if they are confident, you can implement it altogether. And then hybrid model developments, so you can go for some existing system and the new technology interventions which we are talking about, so bringing them together, that can be done. And then industry collaborative and consortium formation, these type of can be done to reduce the cost. Many other projects can also collaborate, and overall the cost can be reduced. And then comprehensive stakeholder education program, which can be done by the industrial bodies, real estate industrial bodies. They can have more and more awareness sessions regarding these for the stakeholders and for the builder and the other associated parties in this area. Then let's take one case study. So here we have a project overview. So location, we is talking about Ahmedabad, the affordable housing project. Scale has 550 units, 25,000 to 50,000 target income group is for this affordable housing. And so somebody who is earning around 25,000 to 50,000 target is the target group. And the challenges are this traditional mortgage qualification barriers are there. Then technology implementation. So mobile based application with simplified interface, alternative data credit assessment capabilities can be part of this technology implementation. And then automated documentation verification using OCR, AI, and integration with multiple lenders for competitive pricing. And the result achieved will be loan processing time will cut down from 18 to 25 days to 6 to 8 days, 70% reduction. Then documentation requirements will come down from 14 to 18 to 8 to 10 documents, and the sale conversion rate will be from 29% to 49%. So there will be significant improvement in sales. And then customer acquisition cost 8,500 reduction per customer. So the customer acquisition cost has come down by 8,500. So total project saving will be 1.2 crores with 18 crores additional sale. So overall, this kind of improvements in the results can be observed. And then key success factors: your user friendly interface designed for limited digital literacy. So that will be the key success factor, that it is not very hi-fi. Even with the basic literacy levels, you can utilize these systems. Integration with the existing lender systems, whatever the lending systems are for the existing lenders, they can integrate it with this system. And then alternative data integration for expanded qualification, so that can also be there. And then comprehensive customer support and education, that will all be making the key success factors in this particular type of mortgage, key PropTech mortgage platforms. So another will be, a location is mixed use township Pune, scale is 32 acres, 850 crore total value, certification, your IGBC Platinum pre-certification. So this is a mixed use township with IGBC Platinum pre-certification. And financing structure involves innovation is your 270 crore green construction loan at 35 basis point reduction, and 150 crore green bond issuance of 40 basis point saving, and sustainability linked loan with performance adjustments, and carbon credit pre-sale generating 5.2 crore. So these are the financing structures which will be utilized by this project. And the performance outcome will be overall financing cost reduction of 1.15% per annum. So that is a significant cost at such a high level of investment. And total interest saving is of 18.5 crores over project life cycle. Premium pricing achieved 8 to 12% above non-green competition. So 8 to 12% above the non-green competition for premium pricing, because the project is IGBC Platinum pre-certification. And then you will see that faster observation, as the project is a marquee project. So commercial space leased at 35% faster, and additional revenue of 72 crores from premium and accelerated sales. So additional revenue of 72 crores from premium and accelerated sales. So strategic implications will be integrated approach, maximizing financing benefits, market differentiation creates sustainable competitive advantage, and operational performance verification supports ongoing benefits. So these are the strategic implications of this. Then short-term outlook of 1 to 3 years. So immediate market evolution. So PropTech advancements, mainstream digital transaction, PropTech advancements will be mainstream digital transaction platform adoption, AI integration into standard underwriting processes, consolidation of specialized platforms into comprehensive solutions, IoT monitoring penetration in commercial buildings, and then blockchain development. So continued pilot projections for land registry application, clearer legal framework for smart contract implementation, and tokenization platform growth within the regulatory constraints, and document verification, blockchain adoption increases. So these are some blockchain developments and PropTech advancement which we can see in short term. That is what are the immediate improvements we can see because of prop tech advancement and blockchain development. Then coming to green financing expansion, so standardization of green financing terms and requirements, integration into mainstream lending platform offerings, and specialized green REIT and investment vehicle growth, and then enhance regulatory support through incentive and disclosure mandates. So these are some immediate outlook, short-term outlook we can see for green financing expansion. And then let's talk about the market readiness indicators for all these. So professional education program expansion, we will have to go for professional education, because many professionals are also not very clear about these new technologies and initiatives. And industry consortium formation and standard developments for them. And then regulatory sandbox program implementation can also be there. And then talking about international capital, so international capital flow integration with emerging models. So these type of things you can actually look at from the point of indicators which are there. So accelerated adoption across all three areas with increasing integration and standardization, making these technologies more accessible to mainstream market participants. Then we go to long-term transformation. So the long-term transformation looking beyond 7+ years suggests fundamental structural changes in how real estate market operate. So ownership model revolution may include widespread tokenization, potentially restructuring ownership concepts, enhanced liquidity fundamentals, altering risk return profile, public-private market convergence through technology platforms, and new hybrid asset classes combining real estate securities and digital assets. And then regulatory framework evolution will bring comprehensive legal recognition of digital ownership structures, smart contract integration into standard legal land registers with blockchain verification, and international cross-border investment facilities. For sustainable integration, climate resilience into all financing decisions, comprehensive carbon throughout building life cycles, and circular economy principles and valuation methodologies, fully incorporating the environmental impact. Strategy preparation requirements would be that will include technology infrastructure capability, specialized expertise in integrated real estate finance technology, advanced advocacy, participation, and international market conditions. So the long-term view suggests fundamental transformation, incremental changes requiring proactive preparation and critical success factors. Basically, we will have active engagement in this area, technology infrastructure, technology for this digital infrastructure investment worked into. Cyber security also something which we have to look. People have to be made aware, so comprehensive stakeholder education has to be done. Expertise development has to be brought in, so that specialized skill development and such academia can also take up these areas of. And then strategic recommendation. So for digital literacy, embrace data analytics in these areas. For financial institutions, they can go for technology, and they can think of risk management evolution. Some areas where financial institutions can work. They can look for portfolio diversification here, ESG criteria into investment decisions. They can do it at their own level, and market, they should have market education also in this area, and identify early mover advantages in emerging segments. So these are professionals, real estate professional, financial institutions, and for. So in conclusion, key insights and action items: fundamental market transfer, fundamentally reshaping real estate finance, not just PropTech, blockchain and green finance create synergistic value beyond, right? And then Indian market characteristics required thorough adoption. Early adoption provides competitive advantage, but professional development imperatives would include continuous career success, cross-disciplinary expertise, increasing the value, differentiating factors, and then strategic active engagement with emerging trends, investment in education, technology, balance with innovation adaptation, and long-term perspective on market. And the call of action will be to begin developing expertise in at least while maintaining the awareness of all three major categories. The future of real estate finance belongs to professionals who can navigate traditional practices while leveraging technology innovation for enhanced value creation. So basically, awareness of these new technologies may look optional right now, but in future they will become essential. So it is time that we are aware of these new technologies, we start adapting these new technologies and start educating ourselves in these new technologies, because today they are optional, but in tomorrow and very recent future they will be very, very essential. So with that, thank you so much.